Welcome. This is episode 4 of the Arizona Report. Today in the studio, we're going to talk about the Unison Homebuyer Program coming up right now. Welcome to the Arizona Report. My name is David Meek. Episode number 4. My guest today is the Director of Corporate Communications for Unison. His company has pioneered a new tool that partners home buyers with institutional investors. It's a program that will increase your options and decrease your monthly payment on a new home. To help us with the details today, Michael Micheletti from Unison. Michael, welcome to the Arizona Report.
Thanks for having me, David.
Appreciate it. So you contacted me a couple of weeks ago, and you've got a fascinating program. And I didn't understand at first how it works, but there are a lot of home buyers in all price points here in Phoenix that could benefit. And now help me kind of guide me through that. Unison is not a bank. You're not a lender.
Correct.
This is not a down payment program, but you help in the down payment with home buyers.
Correct. So you probably, when we first talked, you thought, wow, this is too good to be true, right?
It was, and I looked at it, and then you sent me the information. I read through it, and I thought, I had an aha moment, my light bulb moment. But
I love those. Those are great.
It makes a lot of sense, and there are a lot of people who can use that. So I wanted to have you here today to talk to the listeners and see how we could put this together for some of the listeners.
Yeah. So just to get into a little bit of the history of this, and I think that's where we probably should start, is that this type of investment has been readily available for decades on the commercial side of real estate. Financing in businesses, they regularly finance with a mixture of debt and equity. So forever, the U.S. home consumer has only been able to finance a home purchase with debt. That's it. That has been the option for them. And it's been varying levels of debt.
Debt meaning mortgage debt.
Mortgage debt.
Sure.
And now they have an opportunity to mix that up a little bit, if you will, with equity financing as well as debt. So the programs that we use work in combination with traditional mortgages. That means you still have to go to your local bank, whatever that may be, and qualify for the traditional mortgage. The beauty of our program is that we increase your purchasing power while at the same time lowering that monthly payment because you're putting more money down, and that's the way the bank is looking at it, right? So you go in, you're trying to buy a $400,000 home, let's say here in the Valley. What are you going to do? Well, you could certainly do a 3% down program, 5% down, 10 or more.
But you won't get the best interest rate.
There's a couple things. You don't get the best interest rate, right? You don't get the best interest rate putting down less than 20%, and you also always have to pay mortgage insurance.
Yes.
Right.
And let's go into mortgage insurance very quickly for someone who might not be familiar with that. Mortgage insurance is paid by the homeowner to the lender in the event that the homeowner defaults, which means stop making their mortgage payments.
Right.
And that's why lenders want to see a 20% down payment made to mitigate that risk for the lender.
It's the skin in the game option, right? Of the more that you're putting into it, the less likely that you're going to default on that borrow that you have, the money that you're being given from the particular lender.
But that's a lot of cash. 20% down is a big threshold for a lot of people.
Right. On a $400,000 home, you're looking at $80,000.
Yes.
That's a lot of effort, time, years possibly spent trying to come up with that. And are you able to keep up with the market now is rapidly moving in the Valley? This is not the same conversation as we sort of talked about earlier of 2 years ago. There was a lot more inventory. Prices were a lot lower. We're not in that same realm right now.
It's tougher for buyers right now.
Correct. So how do you increase your purchasing power literally overnight? Well, if you bring on a partner like Unison, we share half and half with that down payment. You have 10%, we can put in the other 10% on the other side of you. So the lender at that point then looks at that offer as it's 20%. You're going to qualify for a couple things. One, the best interest rate, obviously based on your credit score. And then the second thing is you don't have to pay mortgage insurance, which is $200, $300, $400 a month. That's savings in your pocket.
Yes.
It's tangible.
The mortgage insurance completely goes away with the Unison program. Unison helps the buyers get past that 20% down payment threshold, and you're instantly in a realm of the best possible rates, credit assuming you have good credit. So,
Yeah.
so you put 10% down. Where does the money come from?
Great question. So the money comes from institutional investors. They are patient sources of long-term capital. So this is not going to work. This program wouldn't work if it was, say, a venture capitalist that wants an immediate return on their investment, right?
Okay.
We put together this program specifically that would align with a 30-year mortgage, right? You're going to go out, you're going to get that, say, jumbo 30-year. That's a controllable cost for you. On the same side, that institutional investor, a pension fund, an endowment, has long-term patient capital that they're looking to deploy into residential real estate. It's a perfect marriage, those two groups coming together. The consumer needs increasing their purchasing power literally overnight, and at the same time, the investor needs long-term exposure, 30 years, maybe even more, to U.S. residential real estate.
And traditionally, over the arc of time, the U.S. residential housing market has been appreciating and fairly stable. So these institutional investors want a piece of that stability. They're willing to take their cash, put it in your transaction in exchange for potentially profit on the backside, or they would also share in the loss. Walk me through those scenarios. So there's a 30-year time horizon, and if I sell my home, say, at the 10-year mark, and I've made money, I'm a partner with Unison. What happens at that point?
Well, let's go through the whole sort of transaction then, David. There are no monthly payments, there are no interest charges. The money that's invested in the properties alongside the home buyer. So you, the home buyers, put in 10%. Your return on that equity investment that you're making, you would want it to be whatever it is, X, we'll say. Ours, also 10% in this sort of scenario that we're discussing, we're going to want something back out of that as well in that, say, that 10-year window that you're describing. So in this situation, it would be 65% for the home buyer and 35% for Unison.
Of the profit, not the
Right.
equity or the sales price.
So there's three scenarios in this situation. One, if the home went up in value, right? You bought the home for $400,000, it sold for $500,000. The change in value, that $100,000, is what we would both share in on the back side.
You would take 35%. I would take 65% as
Correct.
the homeowner. Okay.
Exactly. But there's two other situations. Say the home never went up in value; it stayed static that entire time, $400,000. All that would come back on the sale of that home would be the original investment that both of us put into the home.
The 10% at $4,000. So if you get your $40,000 back that you had invested 10 years ago, and my equity is not touched.
Correct. And then in the final situation, it would be, well, say that home went down $100,000. Both of us would share in that loss. 65 for the home buyer, 35 for Unison.
That makes sense. Okay. Good information. If someone's interested in the program, first of all, let's give them a website maybe that they can go online.
Very
and
easy. It's
research.
unison.com, unison.com.
Unison.com. And you are a San Francisco-based company. This is not, and again, you're not a lender. So the advantages, again, Michael, to recap, there's no interest. There is no monthly payment. You're simply a partner, a business partner with Unison in the down payment, and you have up to 30 years to return that money.
Correct. There is another option, I failed to mention this, David, is you can buy out the agreement after 3 years.
Interesting.
To give that homeowner flexibility. Say you needed to get into this home. Right. We just talked about how kind of tight this market is here in the Valley right now. But maybe 4 or 5 years down the road, you switch jobs, you get a bonus. All of a sudden, you have a little bit of extra capital on hand, and now you really do want to own the whole home. You can actually afford to own the whole home. You can buy us out after 3 years.
Great. So you have all of a sudden you have a big inheritance, and you'd like to bring that agreement with Unison to a close. You make a phone call, talk to a representative, make the payment, and
the home is appraised at that time.
Okay.
Very simple. Third-party appraiser comes in, says, "Hey, this home is worth $25,000 more." You're going to split that same mechanics, 65-35.
Makes sense. If I have a friend in the mortgage business, can I use any mortgage company, or is there a network of companies that I need to use?
Great question. So right now, Unison is available in the Valley with a variety of lenders, and I'll just name a handful of them right now: Home Street Bank, Guaranteed Rate, Guild Mortgage,
Great.
RPM, et cetera. And we're available across all price points. And I think that's something really to consider as we sort of started off the show talking about sort of the low down payment programs that are out there and the limitations that come along with those that go beyond sort of the finances of how much does your household make, what's your credit score, what's the area that you're trying to purchase in. There are no limitations with our program.
This is not a municipality that's organized this that has those income restrictions. This works on a $200,000 house. This works on a $1.7 million house.
Correct. It all depends on your unique financial situation and what you're looking to accomplish.
Sounds great. You touched on in the pre-interview, Michael, kind of a refinancing component. So if I'm not buying a house, but I currently own a house, you have a product available as well for that
Thanks
scenario.
for asking about that. So that's the Unison Home Owner Program. And that was actually the original core program that the company launched back in 2007. And what that program does is it allows you to easily unlock the equity in your home. This is a HELOC alternative, a reverse mortgage alternative.
And HELOC for someone that might not be familiar with that.
A home equity line of credit.
Home equity line of credit, HELOC.
Right. So there are a variety of ways for a homeowner to unlock the equity in their home. Some of them are easier than others, but most of them come with monthly payments. That's the beauty of ours. You can unlock that equity. Say you need to get $100,000 to pay for a kid's student education, the education. They're going off to college, and you don't want to saddle them with the student debt that you've been saddled with. This is a way for you to do that easily and efficiently with virtually no money coming out of your pocket, right? So you're trying to clear some debt, whatever that would be. The money is yours. This allows you to unlock that with the same terms and conditions that we discussed for the home buyer program.
I see. Boy, it's a brilliant solution. And this is, like you said, this has been available in the commercial realm for a long time. It has just recently been brought to the residential realm. And you're almost brand new in Arizona, too.
Right. So we've been in Arizona since July of last year.
July of 16. Okay.
July of 2016. So we have rolled out. We're in now 12 states plus the District of Columbia, plus we will be in 8 or 9 more states before the end of 2018.
Great. Michael, this is an excellent product, and I'm excited that it helps people get into the home that they want, that there's no payment, there is no interest, and it's a very equitable situation. You can share in the profit, or Unison also, in the event that the market goes down and you decide to sell, Unison's also there to share in the loss.
Yeah.
So.
I mean, it really is. This is not a cookie cutter program. I think that's something I'd like to highlight, is that depending on your financial situation, you may have 20% to put down, but that may be everything that you have.
Right.
No financial advisor is going to tell you to do that deal. They're going to say you need to keep some money in reserve.
Cash.
You need to keep some cash on hand because you know what? Frankly, life happens. You need to keep that money. So this is an alternative in that respect, that you can still put the 20% down, keep cash on hand. I'll tell you a couple stories, David, before we wrap up here. I had a gentleman down in Temecula, and he was going to cash in some stock. He had stock in Google and Apple and whatnot. And he had no problem cashing in the stock, but he did not want to give Uncle Sam the money.
That's a tax event.
Right.
Yeah.
And he did not want to pay that this time next year when he was going to have to file. And this was earlier in this year. And when I was having the conversation with him, I was like, so you essentially got the best of both worlds. You got to keep your assets in those stock options, plus you got the house that you wanted. You didn't even have to downgrade the house. You actually got the house you wanted by using us.
Perfect
Situation of called what we always like to do, diversify.
Yes.
Right? Don't put all of your money into a single asset, because that asset is going to suck up a lot of your money, and it's going to leave you sort of high and dry if something does happen down the road.
That makes sense. What a wonderful, wonderful product. So, and another thing I want to impress on the listeners too is this is easy. You can close in a 45-day window.
Correct.
This doesn't stretch out the home buying timeline at all. You need to work with one of the partner lenders inside the network, and what a great solution. A lot of realtors don't know about this either. So if someone's listening to this podcast and they want to know more, they research it online at unison.com. They also need to take this information to their real estate agent, because I hadn't heard about this before I found you. I think we connected on Twitter initially.
Yeah, I think this is, it's still a relatively new concept as people sort of have you had the aha moment or the what's the catch or what, like, how can somebody make an investment for 30 years and not care about a return and be completely illiquid and just here's some money. You have to look at the investor and understand that they're patient with this because they believe in the house, they believe in you, they believe in the whole system on the whole. So that's why this can happen. Any other investor, this is going to be an issue for them to come up because it's got to work with the consumer. The consumer is the most important part of the equation here.
That makes sense. Great. Michael Micheletti with Unison Homebuyer. You are the Director of Corporate Communications. I appreciate you coming in today, and we'll introduce your product to some people, and I think it's a great, fabulous solution. So
thank you for having me. Appreciate it.
Thank you. Thank you for tuning in to episode 4 of the Arizona Report regarding the Unison Homebuyer program. My name is David Meek. I'm a licensed Arizona real estate broker. To find out more, visit me online at arizonareport.com or give me a ring here in the studio at 480-999-MOVE. That's 480-999-6683. Until next time, we'll see you on the Arizona Report.